What's up, guys? Welcome back to my channel. So today I'm going to give you guys my forecast for the week for August 10th. Now, just to recap a little bit, there are still bearish divergences that I feel needs a little bit addressing, because usually for the overall stock market, the Nasdaq, which is the QQQ, leads. Whenever you see the Nasdaq lead to the upside, the market enjoys, weeks after weeks of gains. But more recently, you can see that there are clear divergences between the S&P 500 and the QQQ, where we did not make all-time highs on the Nasdaq, but we did make new all-time highs on the S&P 500. And you can see that throughout this entire consolidation, we did not break down from the 9 exponential moving average, which is this yellow line here. And you can see that the Nasdaq did and trying to get above it. So there are issues that I feel needs to be resolved in the coming months. However, like I mentioned last week, that there's going to be a nice pop to the upside, and we play the wave 3, and then we're getting a wave 4 consolidation, and we should be seeing more upside into next week. Now, one thing I want to point out is that the Nasdaq is being dragged down by semiconductors. So if you look at the SMH, which is the semiconductor ETF, we had enjoyed a massive 100% run over the last 2 months, 3 months, if you will, and we're now getting this consolidation here. Now, the question here is the consolidation in the semiconductors finished, and we can continue resuming to the upside? I believe that there is more consolidation that needs to be done. If this is a wave A and we're getting a B wave, we should be able to get a C consolidation that tags this 50 weekly moving average, or even the 100 moving average. So if that were the case, I believe that the Nasdaq will also, continue moving down, dragging the market as well. If you look at the weekly time frame, there's no denying that things look extremely bullish to the upside. The MACD has resumed, moving towards the upside. We're getting positive histogram on the MACD. We did not break down at all. And, one can argue that, any dip is a buying opportunity to the upside. And I would actually argue that this is actually the case. If you can't argue against technicals, even though I feel that there's bearish divergences going on between these two indexes. There's no denying that the technicals say, which doesn't care about your opinion at all, that dips are to be bought currently. Now, going back to the Nasdaq, what I think is the most likely outcome. Now, there's a lot of resistance here near all-time highs on the Nasdaq. If we can get a continued push early next week, either Monday or Tuesday, I believe that we can hit, retest all-time highs on the Nasdaq, get a push down in an ABC consolidation. It's not going to be anything impulsive, and it could possibly retest this 704 area, and then we can buy the dip and then resume to the upside. Why do I say we can buy the dip if we get a push down? Now, like I mentioned, you can't argue against technicals. The time to be very, very bullish was down here when it kept rejecting the 9 on the weekly. But in this case, we don't have it, where the 9 is supporting the price action. So if we get a pop higher, it's going to have to fill some of this gap here. And the S&P 500 could possibly test 760, which it never did, this week, right? So that's why I still believe that we could possibly, if we gap up, we can come down a little bit, and then maybe, come down into Wednesday, which is the CPI report, or Thursday PPI, before we get that push higher. Or we can, push higher into the CPI, which is Wednesday, get a push down from CPI, and then consolidate throughout the rest of the week. Now, the Nasdaq is primarily driven by the semiconductors and the memory stocks, right? And if you look at both the semis and the memory, they have not participated at all in this week's rally. So you can see that we had a nice green candle on the S&P 500, primarily driven by the MAGS software ETFs. We're getting some of that on the Nasdaq, but the memory stocks and the semiconductors are actually weighing down the stock. So, if we can get a pop in the DRAM ETF via stocks like Micron, Intel, SanDisk, then we can possibly see, QQQ recover a lot more. But until then, we're not getting that anytime soon. You can see that we're trying to get the cross on the MACD, but so far, it really hasn't been playing out. Okay. There needs to be some sort of catalyst for these stocks in order for DRAM and semis to participate. However, it's had a really nice run over the past couple of months, last few months or so, that I feel that investors have actually kind of rotated to other stocks like Software, Mag 7, into other areas that have not been performing just as well, and kind of a little bit hesitant to move back into this, semis and memory market. So we'll have to really see how this all plays out. The next is the S&P 500 and the QQQ on the daily time frame. So you can kind of see that, we're getting this consolidation here. The MACD is still positive, signaling positive momentum on the stock. If there's going to be any sort of pullback, I believe that the previous all-time highs at 760 is going to hold. And this is the S&P 500 and the QQQ on the 4-hour time frame. You can see that we had, this massive, 3 impulse wave higher, 1, 2, 3, 4 consolidation, and possibly a 5th on Monday. And you can see that this, if we get a higher high on Monday, you can see that there's going to be bearish divergences on the 4-hour time frame on both the MACD and the RSI. Same thing with the triple Qs. We held this area where we broke out of, and we got previous resistance here. Now we're testing it again. So, if we get up to like 730, 740 early next week, we can form bearish divergences that'll lead to a move lower and, consolidate some of these gains. Mark Newton of Fundstrat, also shares the same thoughts. He thinks that we can get another push higher to, complete this 5-wave impulse move that started in late July and finally get some sort of consolidation, in the back half of August. So to summarize, this kind of coincides with what I'm seeing next week. I believe that we could possibly pop, to start the week and get a gap up either Monday or, push higher Monday. And then we're going to have to consolidate some of those gains, either via the CPI, PPI inflation reports. I know those are going to be very important inflation reports because now the Fed is not communicating with Wall Street anymore. He is not making those same updates as Powell was, in the previous terms. And so Wall Street is going to adjust. They're going to look harder into these, data reports to see whether or not the Fed is actually going to cut rates. With today's massive miss on the job numbers, negative 23K versus, I believe, 80,000 jobs. Now the market is pricing in the Fed won't cut rates in the next September meeting. So this inflation report is actually going to be just as important as the NFP numbers we saw on Friday, right? So there you have it, and I'll see you guys in the next video. Peace.